Hey all, welcome to ShareTreck. This is Raj here. Friends, today the market seems red right at the onset. It's around 7 o'clock on the morning of 6th of December, and it's not looking very encouraging right now. And if you recollect, yesterday I had mentioned that the market is like a fully pulled up elastic which is ready to snap anytime. We saw some action in Bitcoin yesterday. There was a flash crash and then it came back up again, and now it looks like a doji candle with two very long wicks. So crazy things can happen right now, and one has to be very careful. And as I mentioned earlier, I'm mostly in cash, very less into equities, and those things are in Costco, Walmart, and Berkshire Hathaway, those companies, and a little bit of Google and Amazon. So that's how I'm configured right now. We'll go into the charts and have a look at three Mag 5 companies which are very close to resistance. They have been pushed down by the resistance in the last so many days. I'm going to talk about that, and I'm also going to talk about Palantir, and I'll make a separate video for genomics after this. Let's get started. Welcome back, friends. The first thing I would like to point out is that there is a job report coming up, and the job report is coming up at around 8:30 a.m. and we have the consensus and forecast and whatever happened in the previous. Now this is going to be read along with the previous JOLTS report and the yields which went up for the bonds will be watched very closely, because the bond market will then decide whether we are due for inflation going forward or if we are going towards recession or a soft landing. So those kind of determinations might be made, and whatever happens to the bond yields is going to impact the stock market. So that's the way we have to look at this. Now I would like to directly go into the TradingView platform and show you some of the stocks that I think are very close to their resistance and would be a very dicey play at this time. So I'm looking at Google, and if you see, there is this diagonal line of support for the previous bull channel, which now becomes a diagonal line of resistance, and Google has been on top of that and has been pushed back down. So there is negative 0.18 price action pre-market. So what is going to happen is today again, we may probably during the daytime, we may come up, but this diagonal line of resistance is definitely stopping us. So we'll be riding under this. Of course, it is still a bull channel because we have got higher highs and higher lows. But there's a little bit of a warning out here, but MACD is improving. That is the other positive, and the mixed signal is that momentum is dropping to below average. So that's what I would like to mention. The other stock that I want to talk about is Meta. So if you look at Meta, again, you will see here that Meta is straddling the diagonal line of resistance, same like what we saw for Google, and pre-market it's down minus 0.19%. Again, we are still in a bull channel out here, even though it's an inferior bull channel because we are below the previous bull channel. That has become a resistance for us, but we need to be a bit careful out here. MACD is very healthy, but momentum is dropping a little bit, but still very strong. Then we have the other company that I want to talk about, which is Amazon, which is also right on top of the diagonal line of resistance. And for Amazon, we are very close to overbought on the RSI. There is a little bit of room to go. And then we have the MACD also, which is bullish. In case of both Google and Amazon, I'm looking at a very long-term picture. Amazon is doing a lot more on AI. They're already well established in cloud, and plus they are a commerce giant where most of the basic necessities will be sold in the event of a pandemic or whatever happens. So in all those factors make me feel confident that Amazon is something that I would like to keep for the long run. Google is also doing pretty well because in their revenue mix, which I showed you last time, there was a pie chart that I showed you. We still don't see AI revenues out there, and when that opens up, it's going to be phenomenal. So I think there's a good future ahead for Google, regardless of whatever happens with any antitrust action regarding their search dominance. So that said, those are the three companies that I wanted to talk about, and I want to bring your attention to Palantir. Now, I'm worried about Palantir basically because we are very overbought in this case with Palantir, and it is showing a bearish divergence. So, what is a bearish divergence? Let us say I take a line to trace the higher highs out here, and then I take another line and look at the RSI or the momentum, and I'm seeing that there is a divergence. While the price action is going up, the RSI and the momentum is indicating otherwise. So I'm thinking that there is a risk ahead for Palantir. We are in a steep bull channel, and there is resistance up there which has pushed it down. So one has to be very careful in Palantir, in my personal opinion, also because the multiples for Palantir are significantly higher than anything else comparable in the industry. So that's what I have to say. Those are my observations for today, and I'm going to be back again with a video on genomics, so watch out for that. Before I go, all I want to say is that it's always a bull channel until it is not. It's always a bull market until it is not. And when it happens, it will happen suddenly. And one doesn't want to be caught in it. And I think the success in investing is being able to take the profits when you can, and then getting in at the bottom. And that's very difficult, and it's counterintuitive, because as the market keeps on going up, we feel greedy and we think that if we hold on a little bit longer, we can get maximum gain. So we are always pushing to sell very close to the top or at the top. And that's where I think we make a mistake. For me personally, I'm going to sell closer to the top, which I think has already arrived. So I already sold quite a bit of my holdings, and I'm going to wait with cash until the market goes down. And I think the other misconception we have is that to be successful in the stock market, we have to be constantly invested. I don't think that is true. You could stay uninvested for maybe 8 months of the year, but make that one deal at the bottom, and then wait to sell it at closer to the top. That's when you will start making profits. And it's easier to buy closer to the bottom, because once you reach the bottom and the market starts rebounding, you'll have plenty of time to enter the market. So you may not exactly buy at the bottom, but you'll buy at a safe position where the downtrend is no longer there, and you're assured some kind of profits, provided you take the profits at the right time before the market falls. I think we are in that kind of a time. Again, friends, this is my personal opinion and not financial advice. So please do your own due diligence before taking any actions on selling or buying stocks. With that, my friends, I'd like to bring this video to an end. See you later. Bye for now.